Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Nio Stock, ticker symbol NIO, which is an electric vehicle manufacturer that many investors are very bullish on, and they are anticipated to announce their Q4 results in the next couple of weeks, and also their full year 2021 results, and this could be a fantastic buying opportunity or an opportunity to take profits. So we're going to talk about the current stock price, where the stock price could go, and what investors could expect from their upcoming earnings report. Nio, ticker symbol NIO, currently trades for around $20 per share, which matches up with their low-end price prediction according to analysts for the next 12 months. However, the average analyst consensus for the stock is $52 per share for the year of 2022, and the high-end bullish price estimate according to analysts is $87. Now, while my current average price for Nio is around $20, ideally we would want to actually snag Nio below $20 per share so it can give us a buffer of safety from the low-end 12-month analyst price target. Right now, 30 analysts are currently covering the stock, with 28 of these analysts saying to buy Nio stock, 2 analysts saying that Nio is a good holding opportunity, and none of these 30 analysts say that Nio stock is going to underperform the overall market or to sell the stock. Nio has also had fantastic catalysts within the last couple of quarters, specifically their ability to expand their electric vehicle presence, specifically over in Europe, particularly in Norway, and this is going to bolster their overall revenues. However, recently, there has been many market headwinds that are preventing Nio from good stock price appreciation, so we're going to go over that. Nio currently is in a very good position because they have a fantastic niche in the luxury electric vehicle segment of the market, and they are clearly a standout player in this particular market segment. It has delivered around 108,782 vehicles just within the last 5 quarters, and these figures are expected to increase, thus increasing their overall revenues in the quarters to come. Their revenues are going to be further bolstered by various new models that they're releasing, improvements in their battery technology, and improvements in their overall manufacturing capacity for the full year of 2022. Their battery as a subscription service has also been a hit among a plethora of electric vehicle owners, which basically means that people who own Nio and they pay a monthly subscription cost of around $155 can put their Nio in a Nio station, and that station will swap out their battery, giving them a fresh battery. Instead of them having to go and charge their vehicle, you actually just change the battery. And so far, this subscription-based model has been working very well. Now, these are very bullish developments for the company, but now let's talk about some of the downsides for Nio stock, why the stock could continue to drop, and why I think the stock will eventually rebound very nicely. The company recently reported around an 8% drop in its deliveries during the first month of 2022, which would be January. And this has concerned investors because with their new integration over in Norway since October of 2021, we should actually see this increasing and not decreasing by around 8%. The company should report more deliveries, not less deliveries, because Norway is one of the largest markets for electric vehicles across the globe, and it was touted to be a major growth catalyst for Nio, according to this Seeking Alpha author. So while Nio is still technically struggling to grow its deliveries, we could see Nio successfully grow their deliveries throughout the next couple of years, and I'll tell you why these deliveries have not been growing. But first, I want to compare them to some of their peers. So other automakers and electric vehicle makers are having no problem expanding their deliveries, thus making their revenues more intriguing for investors, such as Xpeng, ticker symbol XPEV, and this is actually why I personally own Li Auto, Xpeng, as well as Nio. Now, specifically for Nio and even other automakers recently, the reason why deliveries can actually be less even though that Nio is expanding is because of the semiconductor shortage and ongoing supply chain problems. So there's nothing inherently wrong with Nio fundamentally. The company is still operating and firing on all cylinders. However, because of the supply chain shortages and chip shortage, this is negatively impacting their deliveries. And this is why management as well as some investors actually anticipate that their overall deliveries will remain flat, while other companies such as Xpeng and Li Auto are actually upgrading their technology and doing very well in terms of deliveries, at least for the short term. And although Xpeng and Li Auto are giving Nio a run for their money temporarily, Nio could also slingshot back into action. But now let's talk about some of Nio's financials. So Nio basically classifies their finances and revenue in 2 main segments. The first segment is going to be their vehicle sales, and the second segment is other sales. So their vehicle sales make up around 88% of the total revenue for the company, and it's clearly driven by the sales of their luxury electric vehicles. On the other hand, their other sales segment accounts for around 12% of the remaining revenue, and this revenue is drawn from their battery as a service subscription models, their energy packs, their service packs, and their electric vehicle credits, among a plethora of other things. So their main revenue driver is clearly their sales of the electric vehicles, but they are also getting revenues from other sources, which is good news. However, Nio's management actually expects the revenues coming in from their other sales are supposed to decline, and this is going to be very apparent from their upcoming Q4 earnings report. So although they expect this particular revenue source to decrease, it's really not going to hurt Nio's overall bottom line. The author of this article is actually estimating that Nio's other sales segment will drop by around 30% during Q4 of 2021, which is what their earnings report is specifically going to talk about, which means for this particular segment, they're going to bring in around $129.3 million. So honestly, even if this went to zero, it's not really going to affect Nio's overall ability to scale their revenues, because their other segment represents revenues of around $1.429 billion, which is clearly their main bread and butter and their larger revenue maker. So if we combine these two statistics and metrics, particularly for their revenue forecasts, we can conclude for Q4 of 2021, they should bring in around $1.559 billion worth of revenues, and this falls in line perfectly with what analysts from Wall Street are estimating Nio's revenues to be at, because currently, Wall Street estimates that Nio will bring in anywhere between $1.53 billion to $1.59 billion for the period. So overall, this is good news. So although their overall deliveries have fallen around 8%, this is really not going to impact Nio much because they are still going to be able to deliver solid revenue and even revenue growth, with the possibility of beating what analysts project their revenues will be for Q4, which range again from $1.53 billion to $1.59 billion for the period. So investors should pay very close attention to Nio on this approaching earnings report, and we can listen to Nio's management for their revenue projections for their outlook for the first quarter of 2022 and also their full year 2022 revenue metrics. But what about the stock's current price? How attractive is the stock's current price, again trading at around $20 per share? Well, although the current market environment is absolutely being extremely hard on aggressive growth stocks and technology stocks, which would include Nio, the stock looks very fairly priced right now, and it's an attractive buy at current levels, even though the stock could continue to fall. Because if we compare Nio with other electric vehicle makers, the ratios that the other vehicle makers are trading at absolutely dwarf Nio's. So Nio to even be competitive, the stock price should be around at least $25 to $35. Now, you could argue that the electric vehicle space is just very frothy right now, even during this market downtrend. However, I think this market correction is fantastic for buying growth stocks such as Nio, because they're really going to shine in the future. As soon as the semiconductor shortage is fixed, Nio is going to be bolstered and primed for growth, and that's actually when we're going to see the most stock price appreciation for this stock. So if you can get into Nio at around or below $20 per share, you look like you have a fantastic long-term investment in this particular company. So although Nio's delivery numbers have somewhat underperformed its peers such as Xpeng and Li Auto for the last several months, this is one of the reasons why the share price has fallen. However, I do anticipate that the stock price will start to appreciate again, and right now it's trading at a good discount compared to their peers. However, Nio right now is pretty fairly valued, and if you can get your average cost below $20, this is going to be a fantastic investment in my personal opinion. Because once the macroeconomic and geopolitical factors blow over, such as Russia's invasion into Ukraine, various fears over inflation, the Fed increasing interest rates, investors moving capital out of the stock market into the bond market, and other investors pulling their money out of aggressive growth stocks and technology stocks and putting it into value stocks, once all of this blows over, Nio is going to look like a prime candidate for future stock price appreciation. But I would love to hear your thoughts down below. Remember to go and smash that like button right now for more Nio stock news updates. Comment your Nio stock price predictions down below. Subscribe if you are new, and I will see you in the next YT video.